Hi, I'm Liz with Liz Toth Properties powered by EXP Realty. I'm a residential real estate agent in Raleigh, North Carolina. Today is your real estate monthly market update, and we will look at data through September. We'll look at historical trends for Raleigh, Cary, and Durham. We'll look at what is going on in those three cities with the real estate market today, and we'll finish up with some national information about foreclosures, inventory, home prices, and homeowner equity. So I'm going to share my screen and we will get right into it. I always like to start with the local trends. What is going on with the average sales price? This is a 1-year snapshot. And if you look over here, you can see not only the average sales price for each city, you can see the percent increase in the average sales price when compared to last year. So you can see when compared to last year, Raleigh is basically flat versus last year, but Durham and Cary have seen significant increases. And the triangle has grown substantially over the last several years. And I was just talking to somebody about sales prices today and how much higher they are when they versus what they were 5 years ago. So I would like to show this snapshot to just show, if you bought a house back in 2018, January 2018, if you bought a house in Raleigh, your average sales price was around $300,000. Today, over $500,000. So if you've bought a home in the last 5 years in the triangle, even in the last 3 years, you have a significant amount of equity in your home. And we'll talk about equity a little bit later in the presentation. One of the reasons there's been pressure on home prices, despite the higher rates, is we still have a very low level of homes available for sale. So historically low levels of inventory available for buyers today. And even though we have higher rates and we have less buyer demand, we still have demand and we still don't have enough homes to meet that demand. So you can see our month supply has, and I'll go to a 1-year snapshot here. Our month supply has trended up. It's still under a 2-month supply, and it has been for the last year. Now, a normal and balanced market is a 6-month supply. So I want to show a longer trend. So if we look 5 years, you can see we haven't had over a 2.5-month supply. Well, just a little blip right there, but we've had under a 3-month supply for the last 5 years in the triangle, well, in Raleigh, Cary, and Durham. And in the entire triangle MLS, you can see it follows the exact same trend. So we haven't had over a 3-month supply in the last 5 years. And when we look out 10 years, you can see when we get out to like 2013, 2014 is when we start to see some of these areas creep up over the 6-month supply line. But, that's 10 years ago. And we've been significantly low ever since. And it's stayed low because we have a steady stream of people just moving here from other parts of the country. And the reason for that, we're a vibrant economy. We have jobs. It's a great place to retire. We have businesses moving here. And I think I've mentioned this in other videos. Wake County alone grows by 62 people per day. So that includes births and deaths. And so that because that hasn't slowed down, our housing market has stayed very strong. Inventory has stayed low. Prices have gone up. And so we see this trend continuing going forward. When we look at days on market, there's a lot of talk about homes staying on the market a little bit longer. This is days on market, the average days on market. And you can see in Raleigh, Durham, Cary, and the entire triangle MLS, 21 days or less. That's still a very short period of time to be on the market. And when we look out over the last 3 years, you can see we peaked here up in January 2023, some Raleigh and Durham got close to 40 days on market. Still not a long time on the market. And when you look historically over the last 3 years, you can see we haven't been over 40 days on the market. We've had a couple here back in early 2020 when we first got into the pandemic where we saw days on market start to increase because the market really slowed at that time. So days on market is still pretty fast. So I would say if you're a buyer in today's market, you want to still have a sense of urgency. When we look at, closed sales, this information is out and about there now that home sales are down on a national level. They're down as well in Raleigh, Cary, and Durham. And part of that is because of less inventory available for sale. And when we look at new listings that have come on the market, I'll go to a 1-year snapshot here. You can see new listings coming to the market has been relatively flat for the last few months. and homes available for sale has started to increase, yes, but that's part of that is seasonality. So we're starting to see that period of time where less people are putting their home on the market. So there's a few things going on. One, you have the higher rates, and there's people that don't want to move because they have a 3% mortgage or less than 3% interest rate on their mortgage. So they don't want to move and they're not motivated to move. Two, you have seasonality where people just wait until we get through the holidays. We'll put our home on the market in the spring. And then we have softer buyer demand because rates are a little bit higher. We still have demand. We just have softer buyer demand because the rates are higher. That's taken some buyers out of the market and that's scared other buyers. And I see it in my own business where certain buyers will, just hit the pause button. We just want to wait and see what happens. I would say it's a great time to purchase because you have less competition if you can find the right home. So that just gives you a snapshot as to what's gone on historically in the Triangle, what's gone on in the last 5 years, 10 years, and then more recently. What's going on today in the Triangle or in the Raleigh, Cary, Durham area? We have almost 1,800 homes currently available for sale. This includes new construction as well. I've been watching new construction a lot because ever since supply chain opened, we are having more and more new construction opportunities out there today. So again, if you're a buyer, be sure you're checking out what new construction opportunities are out there, or feel free to reach out because not all the new construction opportunities that are out there today are listed in the MLS. So there could be additional inventory out there that you're not aware of. What's under contract in Raleigh, Cary, and Durham, just over 1,500 homes. And what has closed so far this month, in October, we're at October 26th. We've had 644 home sales close through October 26th. We'll see this continue to grow through the rest of the month. So that's what's going on today. And then finally, I want to finish with some slides from Keeping Current Matters. You hear a lot of stuff on the news and people get concerned and they start to call me and ask questions. One of it is, you're going to hear a lot on the news about foreclosures increases. So are foreclosures really increasing? Well, yes, they are increasing, but a lot of what you'll see is that the foreclosures, when they compare to foreclosures, they're comparing to the pandemic years. And that's when there was a moratorium on foreclosures. So have foreclosures increased? Yes, absolutely. But you can see when you look at this graph or this chart here, you can see foreclosures are still record low when you look at it historically back to 2003. And I would say this too is if someone is struggling, and most likely that homeowner has equity in their home and they could sell and avoid foreclosure and be able to get out, out from under their home if they needed to. So that's something to think about as well. And I think that's another reason that foreclosures are so low is that people realize that, if you consult an agent, you find out how much equity you have in your home and what you might be able to sell it for. And if you can make a little money and get out from under that, that's a great thing. So that's another thing I think that has contributed to foreclosures being so low. Inventory. So what's interesting, we talked a little bit about inventory. This is a senior economist from Zillow. When you think about 7+% mortgage rates, do you really think that the inventory levels will go up? And one of the reasons that it's surprising to see, home inventory go up or new listings increase, which on a national level, home inventory or new listings increased from August to September, from July to August. And you will see that in a chart that's coming up here. But that goes against the trend that we have seen for the last 7 years. And again, that's on a national basis. Now, it's important to know that, but real estate is very local. So you want to keep both those things in your mind when you're looking at the data and you're looking at the headlines. So interesting stat here, almost 71% of folks who have a mortgage on their home have a mortgage rate of less than 4%. So most likely, and we talk about this a lot, most likely those folks who are, have a 3%, 4% or less mortgage rate on their home, they're probably not selling their home. A lot of those folks, and I talk to them every day, not interested in selling, because I don't want to give up that mortgage rate on my home and go to another home for a 7.57% mortgage rate or whatever it is today. So we're in the mid to high sevens as of today. So those folks are not wanting to move, one, because they don't want to give up the rate, or two, they may not be able to afford at the higher rate. So there's a big percentage of those people out there who are just not going to sell, or they're probably not selling. Now, as we get higher in the rates, so 4%, they might think hard about selling. And then when they're 5% and up, it's like, yeah, I might sell, or yes, I am definitely selling. So that's kind of what's going on with the mortgage rates and how that's impacting the inventory that we have available for sale. New listings. So this is what I mentioned earlier. So from July to August, we saw new listings trend up. This inventory chart has been tracked. I mean, they've tracked this new listing count for 7 years now. And this particular stat of an increase in new listings from July to August goes against what the historical trends say. So historically, we see new listings start to come down because of seasonality. So is this an indication that people are willing to move and are willing to, are they over, the concern of rates being higher, and are they willing to just put their home on the market and make the move? I don't know. It will be interesting to see what the August to September numbers look like. But again, I mean, if we go back to looking at what the inventory has done or what new listings have done in Raleigh, Cary, and Durham from July to August, we did see it tick up in all 3 cities, but then from August to September, it trended down. So I'm not sure if that was just an anomaly or what, but we'll have to wait and see what the national numbers end up being. I'm going to get into equity. So equity is, this is pretty amazing to me. So if I pointed out home prices over the last 5 years, this is a percent change in home prices. And, obviously it has the map here. The national average is 57%. So if you bought a home 5 years ago, the average U.S. homeowner has seen the home value in their home, or the home price appreciation, increase 57%. When you look at the state of North Carolina, it's 76%. So that's a significant number. And I talked to a lot of folks who have lived in their homes for 20 and 30 years. This goes back to 1991. So this is the percent change in home prices since 1991, almost 300% nationally. That's huge. And in North Carolina, almost 310%. So what does this mean? This means homeowners have a significant amount of equity in their home. And what does that look like when you break it down? Well, almost 69% of homeowners have either paid off their mortgage or they have at least 50% equity in their home. Now that's significant. It's something good for you to know. If you are a homeowner, it's good to look into and see what kind of equity you have in your home. If you're local here, feel free to reach out. I'm happy to help you calculate that number and figure out what that number might look like, because you can do a lot of things with that equity. You can invest, in improving your home. You can make a move. You can use that equity to move to another home if you want to upsize, if you want to downsize. You can also purchase an investment property. So you have a lot of options with that type of equity in your home. So this is significant. And this actually, I wanted to share this as well. So according to CoreLogic, the average U.S. homeowner has about $290,000 in equity, which is significant. Homeownership is the number one way to build your net worth. And the proof is in the numbers right here. What's going on with current home price appreciation? So a lot of the news media, especially at the beginning of the year, they projected that home prices were going to be falling and that, it was going to be very negative. We're going to go into a recession and things like that. Well, it's funny, and I like to share these quotes, so home prices aren't falling anymore. It was a very quick recovery. The residential real estate downturn is turning out to be shorter and shallower than many of the housing economists expected after the mortgage rates went up last year. And that's very true, and we'll look at some numbers to show that. And then also Freddie Mac says, it appears the reduction in supply has outweighed the decrease in demand. And that's exactly what we've seen here in the Triangle. We have had such limited inventory. We do not have enough inventory for those buyers that are out there today, based on what they need. And then looking at the percent change in home values, I've shown this before, but this is just an updated chart that shows through July. They only have numbers through July. But at the beginning of 2022, when the market was really still crazy, you can see the month-over-month increase. And when rates started to go up in July is when we saw things, there was a market correction. And then since the beginning of 2023, all 3 experts here, Case Shiller, FHFA, and CoreLogic, have shown that month over month percent change in home values has rebounded. And so we are behind. This is essentially saying that the worst of the home price declines are behind us and we're back on track. This is another group to look at, so Zillow sees the same trend, Black Knight, and then Freddie Mac as well. So seeing the exact same percent change month over month in home prices. Again, another resource that shows us that the worst of the home price declines are probably behind us. When we look at month over month, and then gives us a national perspective, we're looking regionally here. By July 2023 by region, the national rate of appreciation was 0.8%. And then you can see every single region across the country is back to an increase versus a decrease. Case-Shiller tracks the top 20 metros in the country. All of those metros are back to a positive as opposed to a negative. The U.S. national on home price movement is at 0.6%. So, all of that is great news for the housing market. The limited inventory is going to keep pressure on home prices, and we are seeing it in the numbers here. What's going to happen in the future? A lot of people ask me that. What do I think is going to happen? I think we're going to see the same trend: limited inventory, softer demand, pressure will stay on home prices. But we really want to look and see, what do the experts say, the people that know a lot more than I do. So 2023 year-end home price forecasts, and these are a bunch of experts: AEI, Zillow, Fannie Mae, HPES, and MBA, and National Association of Realtors. Coincidentally, is the only one projecting home prices to be down at the end of the year. Everybody else is projecting an increase. Which is interesting because at the beginning of the year, these numbers looked very different. Everybody was projecting a decline. I think the National Association of Realtors was the only one that was projecting home prices to pretty much be flat versus last year. So I thought that was interesting. If you average all 6 of these, it's about a 3.3% increase is what they're projecting for home price forecasts when compared to the prior year. So I like these home price expectation surveys. So they survey a panel of experts, economists, real estate experts, investment and marketing folks, and survey them as to what they think is going to happen in the future. So this year, the majority of experts are projecting an increase in home prices, but what's going to happen beyond that? What's going to happen in 2024, 2025, 2026, and 2027? Well, these experts have said that over the next several years, we are going to continue to see increases in the home prices. As we go forward into 2024, 25, 26, and 27. So what does that mean for you as a buyer? If you're a buyer today, I would say to have a sense of urgency, because home prices are not going to come down. And I did just have this conversation with someone the other day that when rates do start to come down, more and more buyers are going to be entering the market. More and more people are going to start qualifying. And there is going to be pent-up demand. So if you're going to wait for the rates to come down, you're going to be in more competitive situations, and it could end up costing you more money in the long run. So that's just something to keep in mind. I know today's monthly market update was a long one. Hopefully you stuck with it. If you have questions on the local real estate market, let me know. Feel free to reach out. Also, if you want more information on the Raleigh-Durham area, check out my YouTube channel, Welcome to Raleigh. You can subscribe, hit the bell, and get notified anytime a new video is uploaded. There's great information on there: city tours, community tours, things to do, lots of videos on what's going on in the real estate market. I hope you have a great day, and I look forward to talking to you again soon.